What a week we had, full of volatility, excellent companies, blue chip companies reporting earnings, and more. Hello everyone, welcome back to our channel. Today I wanted to talk about what happened last week, quick summary in case you were not able to see everything, how the market is doing, what I'm doing to control my emotions during this very volatile market, and not that trusty market and more. If you're new to my channel, welcome, but let's get started. First of all, we saw huge volatility last week after companies reported earnings. First of all, we saw PayPal crashing 25% after they reported earnings as they reported a weak guidance in comparison with what analysts were expecting for both their earnings per share and revenue expectations for Q1 of 2022. Because of that, Square stock also dropped over 20% over the past week, even though it has kind of recovered a little bit. Still, they are going to report earnings on February 24th, so we would have to wait and see how they did and what they expect in comparison with PayPal, but I do believe they will get affected as well. Then we saw Google or Alphabet on Tuesday, and the stock went up 9%. Not only because they beat analyst expectations on almost everything they reported except for YouTube, and reported an excellent growth of 32%, the highest between the fan group of stocks, but also because they announced a 20-for-1 stock split. And we know how attractive that is for a retail investor, and even more for such a high price stock of over $2,000. Then we also saw Starbucks and Waste Management, which I will upload a video about Waste Management in the coming days analyzing the company, but we also saw Meta or Facebook reporting earnings, and the stock dropped over 26% as well. Not only because they missed expectations on earnings per share and on daily and monthly active users, but also because of a weak guidance. As they said, they are expecting a growth of about 3 to 11% in the first quarter of 2021, missing analyst expectations as well. Because of that, the only FANG company that had not reported earnings at that moment was Amazon, dropped as well as Facebook earnings created fear in the market, just like it happened with Netflix 2 weeks ago. Amazon dropped 7.81% until they reported their own earnings, which is when Amazon went up 15% after hours. Still, I do have to say that Amazon numbers were not that good in my opinion. They missed analyst expectations on revenue. Yes, they beat on AWS and obviously beat on earnings per share. As we can see, it was a massive bid, but when we dig in a little bit more, we notice that it was mainly because of an $11.8 billion on unrealized gains from the Rivian investment. Still, without that, we can see that their operating income dropped almost 50% year over year as they saw a huge increase in costs in Q4, and also missed expectations on guidance as they are expecting a growth of 3 to 8% for the next quarter. If you ask me, the stock going up 15% was actually recovering from the 7% drop because of the Facebook earnings and a bit of an overreaction as well. As we can see that the stock is really up almost 5% from where it was before Facebook reported earnings. Then we saw Ford down 9.66% after they reported earnings as they missed on earnings per share and a bit on their revenue, and also missed production targets due to supply chain issues and shortage of chips. Last but not least, we saw Snapchat, which also dropped 19% after Facebook reported earnings, but went up 58% after they reported earnings, which is actually a 21% uptrend since before Facebook earnings, as they beat analyst expectation on earnings. They were profitable, revenue, global active users, average revenue per user, and guidance as well. We also saw Nokia, Activision Blizzard, Pinterest, and more, but I have not checked them out yet. Obviously, as we can see, we are seeing a very abnormal volatility in the market right now. Stocks going down 10% on a day and up 15 to 50% the next day. Some of them overreact and others not that much. The stock market crashed even more after Netflix reported earnings, but then was kind of saved by Apple and Google and went down again later on. We gotta understand that these big cap companies were the only thing holding the market before. Other sectors were already dropping, but these blue chip cap stocks were holding tight. Eventually, the pressure brings them down even more with this kind of earnings report. The only way for them to stay at those prices that they were before reporting earnings was if they reported nice numbers, just like Google and Apple, for example. What we're seeing right now is something that we have not seen in years. It was a correction with many problems in the economy. We have interest rates, huge inflation, bad job reports, supply chain issues, and more. Companies are getting affected and the economy is getting affected as well. The 2020 crash that we saw because of the pandemic was nothing like this. The 2020 crash was because of uncertainty with the whole world because of the pandemic. These are the consequences of actions taken to save the economy and the market during 2020. I said in a video last week that I would not get that excited with the green market that we have had in the past days, as we still need to see inflation get better, interest rates go up, and many more. This showed us that we will have a very volatile market at least until summer. Any bad news with any of these issues I mentioned before will most likely make the market drop. Growth stocks are down massively, same with crypto, as the market didn't want anything to do with risky investments. And now big cap companies needed to report excellent numbers and expectations in order to continue with their trend, just like Apple or Google. As I said, I believe we are going to see more volatility in the market with all the inflation reports, interest rates, job reports, and more, at least for the first half of the year. I assume that by the second half of the year, we will have a more clear picture of everything and less uncertainty in the market. But as always, I don't have a crystal ball. I'm not a financial advisor. It is impossible to know what will really happen in the coming months. Still, this shows me that it is creating an opportunity in several companies that were really overvalued or that we have been waiting to start investing, but have never because of the valuation. Now, it is not a secret that we have all been suffering losses in the past months with all the craziness in the stock market, all the downturn and corrections. This has caused a lot of fear and uncertainty to many, which makes many people want to sell as they feel they are losing a lot of money. Which is why if you're investing long term, you should not watch your portfolio if you're not going to buy or do any transaction, as you will feel the need to sell and it might not be worth it at this moment. Because yes, everyone says, why not sell now and buy maybe next week at lower prices if it will continue dropping, as you would recover from losses faster. Which, hey, completely true, but how do you know that next week's stocks are not going to recover? What would happen if you did that last Friday, not yesterday, last Friday, and woke up on Monday with everything up? This is a time to stand firm with our investments so we don't regret the decisions that we make right now with a lot of fear. We need to understand that this is a short-term move issue right now that could be a nice opportunity in the long term, not in the short term. Yes, stocks and crypto could continue dropping, but it is impossible to know when it will stop, which is why we need to have a strategy for the long term. We know it is really difficult to buy today, believing you are buying at excellent prices and that it will go up, but the next day it continues dropping. We need to be really patient and be able to make the right decisions in moments like this, which is why it is very important for us to invest in companies that we believe in, that we have done our own research and more, as it is what it will help us believe in them when the downturn starts with that stock. Also, it is very important to never invest money you will need in the short term. It gets really stressful when you invest money right now that you will need in March, for example, to pay rent. Because if the stock market continues dropping next week, you will see how you continue losing money and most likely sell for a loss. That is basically gambling, in my opinion. It is just like going to a casino hoping you are able to make money to pay for rent. In markets as volatile as today, it requires a lot of stomach and patience. You can check the S&P 500, the Nasdaq, and the Dow Jones in the long term. Obviously, in the long term, it looks beautiful when you zoom out because it looks like it always goes up and that this downturn is going to be nothing more than an opportunity in the long term. But when you zoom in, you can see how the market dropped 40% in 2000 with the dot-com bubble, in 2008 with the Great Recession, in 2009 2018 and even in 2020. So what I want to say with this is that we need to understand the difference between a short and long-term investment. Decide which one you prefer and feel more comfortable with and stick to it. I'm investing long-term. I'm currently losing money on some of my positions, and if you have been following me, you already know. But I have been investing on red days as well during this past weeks. Would really love to know what are your thoughts on the current market, market situation, volatility, and all that. And what is your plan? I'll leave you here a video of the 5 stocks I'm looking to buy this month, and here for you to subscribe. Thank you and see you next time.